Hi, I'm Arash Massoudi, Finance and Markets Editor of the Financial Times, and I'm here at the Private Capital Summit. And I'm joined by Yen Sum, who is chair of the global private capital business at Latham Watkins, who are our partners for the event. Yen, how are you finding things so far?
It's been a brilliant day. I think there's been some phenomenal insights from our speakers today. I've enjoyed each and every one of our panels, and I think the audience have too.
Absolutely. I mean, when we set out a vision for this event, we knew that private capital is a big topic and a big topic to be addressed here in London. How have you seen some of the big macro themes that we discussed going into the event, like the difficulties private equity is facing and the growth of private credit? How have you seen this play out here today?
Well, I think it's sort of, as the various industry leaders have said, it's a rebalancing of scale and risk. Rates have had an impact on private equity exits, that's for sure. But then sponsors of funding, like tech privates have become much more prevalent, and there's a real growth area, particularly for corporates with stable cash flows, carve-outs in the tech industry. So more tariff resilient and geopolitical resilient sectors have become the go-to on the M&A front. And then credit has just been a booming story. So when you look at AI, like the trends we're all talking about, that will be a feature of our lives and our communities over the long term, they are not equity stories anymore. They are also credit stories. And a lot of that funding is going to come from private markets and private credit, as well as equity. But I think that evolution is turning us in a more disciplined investment world and a more selective one.
And another big talking point is this question of consolidation among managers of private capital funds. Easy in practice to model that, hard in reality to execute. And do you think we will still see more?
Yes, and I think that is because we must see more. I mean, in the US alone, there's this McDonald's comparison of 19,000 PE funds and 14,000 McDonald's outlets. But if you expand that into, for example, the private credit space, I am sure that is even more fragmented than the equity space. So that all points to scale, synergy. Those investors who are able to access a broader pool of capital, to be able to be more adaptable in our changing world, and to flex into different types of investment opportunities are the ones that are going to succeed in the long term, and therefore that signals, when you spread that out, that has to involve consolidation. I mean, we're seeing that maybe not publicly, but there are larger managers now assuming specialist teams, for example, from the smaller managers. And I know that a bunch of our clients are super focused on scale around operations, compliance, and those there. So to do that, they're acquiring. But there's a long ways to go, because we're still seeing new entrants. It's just that I think we haven't got yet, because don't forget, regulation plays a part also. Over time, if there is more in that sort of regulations area, then barriers to entry start to go up. And that, coupled with scale, I think we will see more consolidation.
And what's maybe one last question, but what's been cool about today is that not only we're joined by a great speaker list, but we have an audience of 200 senior professionals who are very, very active in this space. What do you think in the next 12 months will be the thing that this group of people will be most focused on?
Well, I mean, the emerging themes are fairly consistent so far. So AI, digital expansion and independence, and how that is financed and funded. We have a massive trend towards a reindustrialization of Europe, but also infrastructure spend continues to scale up in the US. So it's not just Europe, but there is a pressing need in Europe because of decades of underinvestment, because of the conflict and the geopolitical landscape around the world that is shaping governmental policy to international stages as opposed to globalized stages. And so I think that's a massive theme, and I think the asset-backed actually market is also going to play. And I think KKR mentioned something like that market, they believe will grow to something like $9 trillion by 2029, which is a huge level of growth from now. So, I expect that those are the continuing things. If we're here this time next year, we'll see a further development of those themes: infrastructure, AI, asset-backed, and some of the other things we've got to talk about today: insurance and the interconnectedness of insurance and pensions into private capital and away, and around it, both as user and funder. I think that those are the main things to look out for.
It's been an exciting day. We have a few more hours to go, but Yen, thank you so much for joining me, and thanks to Latham for partnering with us.
Thank you, Ethan.
It's been a lot of
real
fun.
privilege. Thank you.
Thank you so much.